Alright guys, welcome back to my channel. So in this video I'm going to be sharing with you the introduction of a strategy I call the MaskMan strategy. It's a sniper strategy, and after watching this video, the only question you have to ask is, why is this guy sharing this video on YouTube for free? That is the question you'll be asking at the end of this video, and I will give you the answer to the question, okay, I'm proposing that you are going to be asking at the end of the day. And the answer is very simple. Most people, or let me say the people who don't really need this video, we end up not watching the video to the end. It is those who are interested in the video, those who are interested in learning new things, in learning something that they can actually apply, we watch the video to the end. It is true that when you create videos like showing charts, flipping and all that, or indicators, a lot of things, that is where you get the views. But at this point, I am not interested in the views. I am interested in impact. So if you watch this video to the end, I'm waiting for you at the other side for testimony. So this is a MaskMan strategy, and it's a sniper strategy. So as you can see here, this sniper strategy gives you an opportunity to shoot on sight. And what I mean is that you can do an instant execution with this strategy, or you can decide to use pending orders. That's what I mean by trapping, okay, while you are away. So if you are a type who are kind of busy with work or anything like that, this strategy is also for you. So you can actually take advantage of this strategy by setting pending orders. Once the price comes to your zone, you shoot, right? So this is a strategy that will change everything for you. So but what I want you to do is to help me package all the things you know. All right, keep it one side. I'm not saying you should throw away everything you have learned, ranging from support and resistance to indicators to any other concepts, right? I'm not saying you should throw it away, but just package it and drop it somewhere and follow me in this process. At the end of this video or this course, then if you think you still need those things, then go and pack it back. I promise you, this is the only thing you are going to be needing from now on. What makes this strategy unique? Why do I think that this is the strategy you actually need? Why do I think that you are not going back to all the things you have been learning over the years? Now, the first thing is, this particular strategy, okay, can be traded in any financial market. So ranging from the forex market, the currency market, okay, to the indices. That is whether you are trading just indices or synthetic indices, or you also trade crypto. So you can trade this, or you can use this particular strategy in any financial market, right? So the second thing is, it can be applied in any time frame of choice. So if you're a type who like trading on a smaller time frame, like 5 minutes time frame, 15 minutes, 1 hour and all that, you can equally apply this particular strategy on a lower time frame, right? You can also use it on a higher time frame, which I will show you clear examples of how you can actually trade this strategy. Now, the third thing is that this strategy uses pending orders and also instant execution. So if you are a type who like looking at your chart, placing your trade yourself manually, you can actually use this strategy. Then if you're a type who are kind of busy with work, or you don't like looking at your trade, or when you are placing the trade, or to see whatever the trade is doing, you just want to see you should also want to mark out your entries, set your pending orders, allow the trade to trigger your buy order or sell order, and then maybe at the end of the day you check out if you are hitting TP or stop loss. This strategy is for you. It gives you the whole comfort you need when it comes to trading. So the fourth thing is that it's actually considered your psychology, so, and risk management. So you don't need to work much on your psychology anymore, because understanding the strategy and following the strategy is automatically a kind of free ride to you conquering your any issues you have when it comes to psychology and risk management, because the strategy requires patience, and if you can follow the setup, all right, you don't have anything to bother about in terms of psychological manipulation and all that. All right, risk management is also in check, all right, when it comes to this strategy. So like I said, why I'm sharing this strategy is because I know that most people are not going to watch this video to the end, right? I'm challenging you. If you watch this video to the end, you are going to come back with testimony under the comment section in this video. It can actually take you up to 1 month to finish up this video, because I want you to take it step by step, right? It can take you like 2 weeks to finish the video. If you want to take your time up to 6 months to finish the video and apply them, there is no problem. If you want to watch the video in a day, it's not advisable, but you can still do it, right? So but what I'm saying is, at the end of the day, you are coming back to the comment section to talk about the impact of this particular trading course, right? So the next thing we are going to be looking at is the build up. Okay, what is the foundation of this strategy, right? So when it comes to any structure or anything at all in life, there must be a clear view about the foundation of whatever. If you don't understand the foundation of whatever you are going into, at the end of the day, you are going to be making a lot of mistakes. So this strategy is clear and the concept is direct. So how or what is the build up of this strategy? First, we are looking at market structure. The second thing, we are looking at liquidity. We are going to be using the concept of liquidity sweep. The third thing, we are going to be talking about the discount and premium we are going to be applying. Then we also look at the fourth thing, which is the order block. Then the candlestick formation within the zone, which we are going to discuss in details, right? So, and the last but not the least, we're also going to be considering fair value gap. So these are the concepts we are putting together to build this strategy. So some people trade only market structure, just understanding market structure, they can trade with it. Why some people trade with sweep of liquidities, and some people just consider the premium and discount of a particular market range and take their trade. Some people just trade order block, candlesticks, and even fair value gap. But this strategy considered all these things, put them together in order to take a quality trade. So we are not interested in the number of trades you are taking or you are to take in a day or in a minute or in a second or in 1 year. We are interested in quality trades. If you are taking 5 trades in a week or taking just 2 trades in a week, the most important thing is that the trades you are taking are quality trades. So we are going to be starting with the first thing, which is market structure. First, we are going to be looking at 3 different types of market structure, which is the basic market structure, the advanced market structure, and the algo market structure. So for this strategy, like you can see down here, we are going to be focusing on the algo market structure and a little bit on advanced market structure. All right. So first, we are looking at basic market structure. So in a basic market structure, okay, you have something like this. You can see the image I put in here, or the sketch, okay, how the price keep breaking the highs or the lows, okay, depending on the direction. So down here, in an up or down trending market structure, the price moves in swings, right, as it heads towards the upward direction or downward direction. That's same thing as, you know, a price breaking structures. You know, the price don't just move all the way to the upward side vertically or to the downward side, right? The price moves in swings, in the process breaking structures towards the upward side or towards the downward side. Okay, so this is a clear example of a basic market structure in sketch, right? And if you look right here in detail, you can see that in this market structure, we can clearly observe how the price keep its current high higher than the previous ones, and its current low lower than the previous one. So if you look at this point right here, the L1 represents the low one. We have L2 low 2, low 3, low 4, and low 5. So if you look at the sequence, you can see how this price never invalidates any of the low or try to move below the previous low. They maintain this sequence of movement, right? You can see the low 1 is lower than low 2, and low 2 is lower than low 3, low 3 is lower than low 4, and low 4 is lower than low 5. So if you come to highs, the H1 is high 1, H2 is high 2, high 3, high 4, and high 5. So you can equally observe how this high maintain its current high higher than the previous one. So high, if you look here, from high 5 is higher than high 4, high 4 is higher than high 3 is higher than high 2, and high 2 is higher than high 1. This is a clear uptrending market structure example of a basic market structure, right? This is a downtrending example, which is just opposite what we have here as an uptrending market. This is a chart example of a basic market structure. If you look at the movement from here, the price created a low, made a new high, and the second low, which is going to be low 2. So this is swing low. So the SL is the swing, is represents swing low, SH is swing high. So you can see this swing low 2 is higher than swing low 1, then swing low 3 is higher than swing low 2, swing low 4 is higher than swing low 3, and so on, right? The same thing when it comes to swing highs. Okay, so you can see we have swing high 1, 2, 3, 4, 5, and 6. So if you check, you see the sequence of movement and everything when in an uptrending market example. All right, so the next thing is a downtrending example, which you can clearly see everything is just opposite of what we have there. An uptrending market, right? It's the opposite. Okay, so in a downtrending market, the price maintain its low lower than the previous one, and its swing highs lower than the previous swing highs. Okay, so the price keep breaking structures towards the downward side. Okay, so that's exactly an example of a downtrending market structure. Okay, in a basic market structure. So the next thing I'm going to be checking out is the advanced market structure. So if you look at the structure right here, or the sketching, you can clearly see also an uptrending market and also a downtrending market. So what is the difference between this advanced market structure and basic? So look at this point right here. In advanced market structure, the price make equal highs and equal lows, right? So if you look right here, the price is pushing towards the upward side. At a point, the price started to retest a particular swing, which if you look right here, this is a swing low 1 and this is swing low 2. So swing low 2 is equal to swing low 1, and the price makes a new high, breaks structure towards the upward side, clearly showing you direction, right? After that, the price retraced back and also broke structure again, but at this point the price pushed down and retested this particular level. So we have swing low 1, 2, 3. So at this the swing low 3, okay, should be lower than swing low 4, but in this case swing low 4 is at the same point as swing low 3. So in this point you are having equal lows. Okay, so as you are having equal lows, as the price keep breaking structures towards a particular direction, in this case towards the upward direction, we can clearly say that this is an advanced uptrending market structure, right? The reverse is the case when we are trending towards the downward side. You can see the price breaking structures towards the downward side, also in the process creating equal highs. In this case, we are having an advanced downtrending market structure. Okay, as simple as that. So let's see a little bit of chart example. So if you look right here, you can clearly see the price breaking structures towards the upward side. Another important thing you can observe is the point that the price decided to keep giving us this equal lows. Okay, and also look at here, the price also gave us equal lows. Look at another equal lows, and here, so we have this equal lows as the price keep pushing towards the upward side. This is very important. So I want you to do something. Pause this video, go to your chart, because I said we are going to be focusing more on the advanced market structure and the basic market structure. So if you want to flow with me, and if you want to enjoy this video, if you want to enjoy this concept I'm about to share with you, the most important thing you have to do is always practice. So don't force yourself to watch a particular video or particular episode completely, maybe within 5 minutes, 1 hour or so. You can take it slow and steady. Make sure that each of the section you watch, you go to your chart, identify that particular pattern or that kind of market structure, identify it, practice it in different pairs. Okay, all right, before you proceed to the next section of this video, right? So you can pause this video, go back, check out where you can actually identify an uptrending market with equal lows, and at that point we call that particular market structure as an advanced market structure. Okay, the reverse is the case in a downtrending market. Price is breaking structure towards the downward side, but at a point the price started to make an equal high, and you can see another equal high right here. So in this case, we have an advanced downtrending market structure in this case. So it is time for you to go to your chart, check out this, compare, look at different pairs, check out the an uptrending markets, okay. Identify the advanced market structure where you have equal lows, okay, when the price is trending up, and equal highs when the price is trending towards the downward side, okay. So I believe by now you are done. So we move to the next thing, which is the most important market structure in this video, right? This is the most important. You need to drop everything you are doing right now and pay very close attention to what I'm about to share with you. This is the holy grail, right? This is mind-blowing. So if you understand this market structure, I don't think you are going to have any issues when it comes to this particular setup, right? So in algo market structure, the price tends to invalidate, okay, a certain high or low. The price tends to invalidate a particular high or low in an algo market structure. So this is a sketching of what this particular structure look like. So if you look at this break of structure right here, okay, and you after the break of structure, the price retrace back, sweep liquidity, all right, break another structure, sweep liquidity. So if you pay close attention to what is happening right here, you can see that the price moves down below, okay, or lower than the previous low, which is against the normal occurrences when it comes to the basic market structure and the advanced market structure. So you don't expect the price to go lower. If the price is going to be pushing up, the price should maintain the current low higher than the previous ones, okay. But in this case, the price tends to go lower than the previous low, all right. As you can see, we have low 1, low 2, and you can see the low 3 now goes below low 2, which is not what we actually wants, all right. That's not what any trader wants, okay. Every trader wants the price to keep maintaining that sequence or that flow of price not going below a particular low, okay, because that's where stop losses are, that's where you have already made your entry before now and all that. So but this is exactly what you want. You want the price to invalidate a particular low before we start thinking of taking a trade. This is the kind of market structure you want to pay close attention to. So this is a clear example of an uptrending algo market structure. The reverse is the case when we are pushing towards the downward side. You can see we have a high one and price break structure, push up again and took out this high one, and we now got this high two, which also broke structure towards the downward side, retraced back, and the price also took out this level, which you can equally note as high 3. So the high 4 move higher than that at this point validated this level before breaking structure. So this is exactly what you want to see, okay, in your chart before you start checking for maybe entry anything, which I'm going to be sharing in this video, okay, in the subsequent video. All right, so this is a clear algo market structure, all right. So the next thing we are going to be checking out is an example of this market structure. So you can see at this point the price broke structure here, push all the way to the downside, broke structure, but here you can see the price decided to invalidate this high, okay. You can see the price could have maintained the sequence, okay, or the flow of trying to maintain each of the current high lower than the previous one in a downtrending market. Instead, the price push up and move above the previous high. At this point, we are having an algo market structure, which is the type of market structure we actually want. So when the price push all the way to the downside, remember this is very crucial when it comes to this particular market structure of a thing. There must be a break of structure before you start looking if it will be an advanced market structure, basic market structure, or an algo market structure. Break of structure is very, very important, right? It's fractal when it comes to this strategy. So you can see after a break of structure, the price retraced back, broke another structure, then push again and take out this high. So at this point, we also had a clear example of an algo market structure. So you can see the price keep taking out a particular high. Okay, so when the price decided to clear this high also, by now you should have known that we are currently in an algo market structure. All right, so this is basically a clear example of a downtrending algo market structure, and we also have a clear example of an uptrending market, okay, in this particular section of algo market structure. So these are the basic things you need to understand about this strategy. So remember, this is just the section 1 of the foundation of this strategy. At the end of the day, we are going to dissect each of the foundation or the build up or each concept in this particular build up. Once we finish dissecting them, making sure that we understand them, then we'll put them together and see how we can actually take quality trades with this particular concept. Guys, this is mind-blowing. You wouldn't want to miss any of the episodes because I'm going to be dropping the part 2, part 3, and we are hitting up to the 12th episode in this particular strategy, right? I want to break it down in such a way that everybody who is actually ready to learn new things and apply something that is working can actually follow step-by-step process. This is not dropping any random video, but I want to make sure that it is step-by-step process that will guide you on how to take advantage of the financial market. So all you need is to make sure you take your time. Each of the section you've consumed, try to go to your chart and practice them, replicate them, try to mark out all the things I've shown you in this video, okay, and practice them before going to the next one. You should do yourself a favor not to skip any section of this video and not to rush while watching any of this video. Always remember to take note. It's going to help you, and at the end of the day, I'm going to see you in the other side. So stick around and make sure you turn on the notification bell, and also get ready for the next section of this particular strategy. So if you want me to drop the next one, which is the next concept in this strategy, I want you to like this video right now, then share this video to someone you believe that he or she really needs to watch or see this kind of setup. All right, and also don't forget to subscribe to this channel if you are new to my channel. Leave a comment, tell me how you feel about this particular concept that you have learned. Okay, if it's a new thing to you or you already know it, all right, then tell me how ready you are to consume the next concept I'm going to be dropping. Bye for now, guys. Enjoy.